Happy New Year and welcome to TradeNBI.com. This is John. This report is for the 4th of January. Well, market continues its move. I mean, now we're getting an outside move from the ES, the S&P 500, breaking into new highs. Of course, the holiday trade going into the end of the year anyway was mostly positive. I mean, any softness that was in there was just, in our view, looking to capture back to the avian yellow line right here. And not even seeing much of that. Of course, now you have the rebalancing end of the year and then new inflows back into the start of the new year. And of course, obviously there's continued talk of added stimulus, big budget numbers, also huge deficits. So you're going to be looking at major inflationary pressures, which is mostly the result and the reason we're seeing the rise in the market, because it's not going to accept a devaluation based on currency reduction. So it's just the way it always plays out. It's despite some people that think it's contrary to what's happening economically, and that becomes less relevant to this valuation purpose. So you have to understand those dynamics in order to be okay with what things are, because everyone looks at PE ratios, this, that, and then, well, that is fine, but if you devalued the dollar by 20, 30, 40%, you've got to see a corresponding numeric increase to maintain status quo. So while some people think there's growth, not necessarily growth, but just making up for the devaluation. NQ, likewise, rise here, cyan under red on both markets, short-term buyers rising. The ES we saw was a little bit better because the orange had already broken below the steel. Not quite the case here, but needless to say, it's still very effective. We need to see a little bit more movement on that shakeout. We've got to break past this peak value right there on the shakeout histogram at 1605, and we're currently at 1437. So that's something to keep an eye on, especially from a daily standpoint, because rolling over before making higher than the previous, particularly on a third consecutive higher high on a lower shakeout reading, would not be a good thing, at least from a rise standpoint. So the end of year Forex basically filling in positive extremes from right back here. You did it beautifully, right on the money, and turn around right from there. So back to the usual, and that's just because the expectation is the U.S. is just going to go crazy with Biden. I think the market is suggesting that any of those Trump challenges have zero chance. So whether or not there's going to be that extra 2,000 stimulus doesn't seem like it. The Senate Majority leaders seem pretty adamant against it. But, and then there it is. We started to see the turnaround for gold as we were getting, well, rising gold, rising shakeout. It had been kind of, in a malaise a little bit. Then we started to see that peak as soon as the last stimulus agreement started to work through, which was the beginnings of it right here. And then finally when it passed, and then the suggestion of additional, and there goes gold, because that is a significant change. So when we look at the very shortened action leading up to the first, it's pretty clean for the most part. I mean, you had your simple dips of the orange. There weren't any real dramatic plays until a little bit later in the mid-action. It started with this first dip, really strong from a negative 13 dip of the red DOC, and coming off of Power Mode 2 with a little bit of the spike momentum moves, the unusual activity that's usually bearish. Is why it's red right there. It came down just a little bit, but produced beautiful orange setup. Now that one, while still rising, had a little bit of a retrace, and then you produced a P2 pivot. So you get the higher red pivots, the production of the orange. We also had the dip of steel below zero, and that's the one that took off. Now it was interesting enough because we had had all these previous algo levels from before that had taken place on this spike, and those all got filled beautifully because they like to take care of business and do what they're supposed to do, which is meet those target lines. And then they created a whole new set, which pretty darn close to the existing ones. So we get here, we get another level right in there, and coming across over here. So I have ranges, and now we're producing a new set as well. So there's going to be some really excellent opportunities for returns coming back into these plays. We'll pause. You could even mark the next wave that began just a little bit ago. And of course, this being pre-market, very easy to move that light volume action. So that's just marking those positive extremes as they started out there, and beautiful set of retraces. Actually, we're really looking more towards the beginning ones, which would be somewhere down here in the 26 range, which would be a significant move back. It's not necessarily set to happen immediately, but when it does, be ready for it. As always, though, excited about the new year. Let's just continue to follow those readings because they've been phenomenal. As always, though, trade well. We'll talk to you later.